whatever is the value of the debentures, you will be transferring them to the debenture holders account. So that is why I have debited the debentures account and credited the debenture holders account. If the authorized capital and subscribed capital is given, so we will be considering only the subscribed and paid up capital and not the authorized capital. What is the value of equity shares? 5 lakhs. So what is the paid up value of each share? 100. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. I welcome you all to this session. In this session 2 of Unit 3, we will be working some problems on alteration of capital. Now let us see the problem here. So problem 1, the balance sheet of Fortune Limited is as follows. So the company's name is Fortune Limited and they have given us the balance sheet here. So 19,000 shares of rupees 100 each, 19 lakhs, creditors 1 lakh, debentures 1 lakh. Then on the asset side, we have land and buildings 1 lakh, plant and machinery 2 lakh 60, furniture and fittings 20,000, stock 3 lakh 70,000, debtors 1 lakh 80,000, goodwill 2 lakhs, profit and loss account 9 lakh 70,000. Total is 21 lakhs on both the sides. Now let us see the additional information here. So the company is reconstructed as follows. Now they have a scheme of reconstruction. Now let us see what is the scheme of reconstruction is. The shares of rupees 100 are to be reduced to an equal number of fully paid shares of rupees 40. So 100 rupees shares are to be reduced to rupees 40. So what is the number? So we have to just deduct 60 rupees from the each of the shares. Now the share value is 100 rupees. Now it has to be reduced to, so you should understand, reduced to rupees 40. Now if they say if it is reduced by 40 means we have to deduct 40 rupees. Now they have told 100 rupees share is reduced to rupees 40. So what is the amount you have to deduct? So we have to deduct 60 rupees from each share because 100 rupees share is being reduced to rupees 40. So you should know the difference between reduced to and reduced by. So if it is reduced by, you deduct. So you have to deduct 40 rupees, but if it is reduced to 40 rupees, then 100 minus 40 you have to take it as 60. Then to issue 1000 new shares of rupees 40 each as fully paid up to debentures in full settlement. Now they are settling the debentures also. So in the previous session, we had just had a discussion on capital reduction or alteration of capital. So why do we do alteration of capital? Is mainly to write off the losses. We have to settle the debentures. We have to settle the creditors and the debtors, etc. So here we are settling the debentures. How they are settling the debentures? By issuing 1000 new shares of rupees 40 each as fully paid to debenture holders in full settlement. So they are paying the debenture holders 1000 into 40,000 as equity shares in full settlement. So next one is the amount available is to be utilized to write off the goodwill, profit and loss account and writing down the value of machinery. So whatever money we have collected by reducing the capital, by reducing the debentures, so that amount will go to the reconstruction account, or we can also call it as the capital reduction account. So that amount which has been credited to the capital reduction account or the reconstruction account, that will be used to write off the losses. So what are the losses here? The goodwill is there, the profit and loss account is there, and whatever balance is there, we are using it to write down the value of the machinery. The machinery value we can write off. That is, we can depreciate the machinery with the help of the balance available in the capital reduction account. So authorized capital of the company is 20,000 shares of rupees 100 each. Give necessary journal entries and prepare the reconstructed balance sheet. So we have to give the necessary journal entries and also prepare the reconstructed balance sheet. So we will just write the entries here. So journal entries in the books of Fortune Limited. So the first entry will be for the reduction of share capital. Now they have issued 19,000 shares of rupees 100 each. So 19,000 into 100. So since I am reducing the share capital, so I am debiting the entire share capital. The share capital account debtor 19 lakhs. So 19,000 into 100 is 19 lakhs. To new share capital. So what is the new share capital? 19,000 into 40. So 40 rupees is the new paid up value of the share. So 19,000 into 40, that comes up to 7,60,000 and to reconstruction account, or you can also call it as capital reduction account. So capital reduction account. So to new share capital account 7,60,000, to reconstruction account or capital reduction account it is 11,40,000. So total comes up to 19 lakhs. So being reduction in the paid up value of the shares. So the paid up value which is 100, it has been reduced to rupees 40. So there is a reduction of 60 rupees. So that reduction, whatever we have taken away from the share capital, we have credited it to the capital reduction account or the reconstruction account. Now, the next one, in the additional information, next they have given us about the debentures. Now, these debentures, first we will transfer them to the debenture holders account. So, debentures account debtor 1 lakh to debenture holders account 1 lakh, being debentures transferred to debenture holders account. So, whatever is the value of the debentures, you will be transferring them to the debenture holders account. So, that is why I have debited the debentures account and credited the debenture holders account. So, I have transferred the debenture value to debenture holders account. Now, the next entry will be, if you can see here, to issue 1,000 new shares of rupees 40 each as fully paid to debenture holders in full settlement. Now, if you can see here, what is the value of debentures here? Debenture value is 1 lakh. So, for the debenture value of 1 lakh, you are paying, so the value of debentures is 1 lakh. And what are you paying here? You are paying 40 into 1,000, 40,000. So, you are paying 40,000 equity shares only. So, what is the difference amount? 60,000. So, this difference of 60,000 will go to the reconstruction account. So, when I am writing the journal entry here, I write debenture holders account debtor 1 lakh to share capital. So, this is the equity share capital. So, we are issuing equity shares. So, that is 40 into 1,000, 40,000, and to reconstruction account, the difference amount is 60,000. That is the reconstruction account, being debenture holders paid in shares. So, debenture holders are paid in shares. Next, reconstruction account debtor 12 lakhs. So, how do we get this 12 lakhs? If you can see the balance here. So, here there is a credit balance of 11 lakhs 40,000 and here there is a credit balance of 60,000. So, 11 lakhs 40,000 plus 60,000, that will be how much? 12 lakhs. So, I have written 12 lakhs here. So, I have debited the entire reconstruction account or the capital reduction account to 12 lakhs, to goodwill account to 2 lakhs, to profit and loss account. So, what is the profit and loss account balance? If you can see the balance sheet here, so here there is a debit balance of 9,70,000. So, this I am writing off. Goodwill also I am writing off, and the remaining of the plant and machinery I am writing off. So, when I am writing off all this, so I write reconstruction account debtor 12 lakhs, to goodwill 2 lakhs, to profit and loss account 9 lakh 70. So our whatever is remaining, that is the 30,000 remaining, so that I have written off to the machinery account. So this is the depreciation written off. So whatever is the depreciation on the machinery, that is 30,000, I am writing off, being various losses written off. So we all know that whenever there is a capital reduction, then we will be making use of that money to write off the past losses of the company. So being various losses written off. So in this way, we have completed the journal entries for capital reduction. Now the next one is balance sheet and reduced of Fortune Limited. So after the reduction of the share capital, we have the balance sheet. So when you write the heading, you have to write balance sheet brackets and reduced of Fortune Limited as on. So whatever is the date given, you have to write the date. Now we have the share capital. So 19,000, this is the old share capital. So 19,000 shares were there already in the balance sheet which was given to us. So that is the 19,000, and this 1,000 is the 1,000 equity shares issued to the debenture holders. So 19,000 plus 1,000, it is 20,000. So 20,000 shares into all the shares are of the paid up value of 40 rupees. So 20,000 into 40, it is 8 lakhs. Then we have the creditors 1 lakh. So total is 9 lakhs. So there are no other entries in the liability side of the balance sheet. So we will not write any entries here. Now here on the asset side, we have the land and buildings. If you can see the old balance sheet given, so in the old balance sheet, there is no change in land and buildings, but there is a change in the plant and machinery account. So plant and machinery, we have written off 30,000. So that we have to take care of. Furniture, it will be the same amount. Stock also same. Debtors also same. Goodwill and profit and loss account, it has been written off. We have already written off both this, so we will not carry it to the new balance sheet of the company. So in the new balance sheet, we will have only land and buildings, plant and machinery, furniture and fittings, stock and debtors. So goodwill and profit and loss account, we have already written off the losses, so we need not present it in the balance sheet. So when I am writing the balance sheet here, if you can see here, land and building, the value remains the same at 1 lakh. Now machinery value, what is the value of machinery? 2,60,000 less written off. What is written off here? We have written off 30,000 worth of depreciation on machinery. So 2,60,000 minus 30, it is 2,30,000. Then furniture value remains the same, 20,000. Stock 3,70,000. Debtors 1,80,000. So the total is 9 lakhs. So we have the reduced balance sheet of Fortune Limited. So this is the how we have to solve the problems given on capital alteration. Now we have one more problem here. So the next problem is, so this is the balance sheet of Bharati Limited is as follows. So this is the balance sheet of Bharati Limited. So we will write, so the liabilities. On the liabilities side, we have the authorized capital. So authorized capital is 10,000. PR refers to the preference shares of rupees 100 each. So it is 10 lakhs. Then 10,000 equity shares of rupees 100 each, again 10 lakhs. See, whatever is the authorized capital, we should not take into consideration. So if the authorized capital and subscribed capital is given, so we will be considering only the subscribed and paid up capital and not the authorized capital. So in the subscribed capital, we have 7,500 preference shares of rupees 100 each, 7,50,000. So this amount we have to consider. Then 5,000 equity shares of rupees 100 each, 5 lakhs. Sundry creditors 30,000. bank draft 20,000. So when you add all this, you get 13 lakhs. Now in the asset side, we have the patents at cost 8 lakhs 50,000, plant and machinery 42,200, leasehold premises 1 lakh 30,800, stock 55,000, debtors 76,500, preliminary expenses 12,000, profit and loss account 1 lakh 50,000, cash in hand 500, discount on issue of shares 18,000. Now what is this discount on issue of shares? So discount on issue of shares refers to the discount in the face value of the share. Suppose a share worth ₹100 is being offered at 98 rupees, that is at a discount of 2 rupees. So the discount which the company is giving to the shareholders, it will be a loss to the company, and as such discount will be shown on the asset side of the balance sheet. So it is a loss which has to be written off by the company. So as and when the company makes profits, it can always write off the discount on issue of shares. So this is the balance sheet here. So we have certain fictitious assets. So what are the fictitious assets here? So we have the preliminary expenses, profit and loss account, and discount on issue of shares. So why they are called fictitious assets? They appear on the asset side of the balance sheet, but they are not assets. So they are losses of the company which will be shown on the asset side. So the preliminary expenses are the expenses incurred in the formation of the company. So whatever expenses are incurred by the company, they will be preliminary expenses, and every year a part of the preliminary expenses will be written off as deferred expenditure. Then profit and loss account appearing on the asset side of the balance sheet. What does it denote? It denotes a loss to the company. So whenever there is a loss in the company, that loss will be shown on the asset side of the balance sheet as profit and loss account. And if there is a profit, the profit and loss account will be shown on the liability side of the balance sheet. Then next we have discount on issue of shares. I have already explained to you, discount on issue is a loss to the company which is incurred because of the issue of shares at a discount. So they have issued shares at a discount of 18,000. So this is a loss to the company. So these are the various fictitious assets which have to be taken care of whenever there is a capital reduction. Now let us see what the next part of the problem tells us. The company is reconstructed as follows. So they are going in for reconstruction, and the preference shares of ₹100 are to be reduced to an equal number of fully paid shares of ₹50 each. Now they are reducing the share capital to half. So the preference share capital, if you can see here, what is the preference share capital here? 7,50,000. So this is for 100 rupees. So when each share value is 100, the value comes up to 7,50,000. Now they are reducing it to almost 50 rupees. So half of it will be the share capital and half of will go to the reconstruction account. So share capital amount is 7,50,000. So this is being reduced. So 7,500 into 100. Now this is the old capital. Now the new capital will be 7,500 into 50. So the paid up value of the share of 100 rupees is being reduced to ₹50. So we have to make the adjustment here. So 7,500 into 50, it comes up to 3,75,000. So out of 7,50,000, you deduct 3,75,000, you will be remaining with 3,75,000 rupees. Then next, equity shares of ₹100 are to be reduced to an equal number of fully paid shares of ₹25 each. Now, if you can see here, what is the value of equity shares? 5 lakhs. So, what is the paid up value of each share? 100. So, what are you reducing it to? You are reducing it to 25. So 5,000 into 100. So this is the old share capital of 5 lakhs. Now you are reducing it to 5,000 into 25. So you are reducing it to rupees 25. So that comes up to 1,25,000. So the difference amount goes to the capital reduction account. So whenever the problem is there, you have to analyze the problem in this way. Then the amount thus rendered available for reduction of assets to be apportioned as follows. Now we have 3,75,000 from the preference shares and again 3,75,000 from the equity shares. So totally we are having almost 7,50,000. Then from that, what are we supposed to do with that? So amount thus rendered available are to be apportioned as follows. So we have to preliminary expenses, profit and loss account, discount on issue of shares to be written off entirely. So we know the value of preliminary expenses. So what is the preliminary expenses value? 12,000. So 12,000 should be written off. Profit and loss account, 1,15,000 to be written off, and also the discount on issue of shares. So these three items are to be written off. So it will be coming up to 1,45,000. So the next step is, so we will write off these three entirely. So entire amount of these fictitious assets are written off entirely. Then rupees 30,800 of the leasehold premises. Now whatever is the value of the leasehold premises, if you can see here, it is 1,30,800. So from this I am minusing 30,800. So that is the value of depreciation. Then the next one is 20% of the plant and machinery. So what is the value of plant and machinery? 42,200 into 20 by 100. So when you calculate, it comes up to 8,440. So this is the depreciation you will be charging on plant and machinery. Then next one, and sundry, 20% on plant and machinery and sundry debtors. So what is the value of sundry debtors here? 76,500. Now 20% on this, 76,500 into 20%, that comes up to 15,300. Then next one is, and the balance available to write off the patents. Now first we write off all these losses, and if there is any balance, that balance to be utilized to write off the patents. Pass journal entries and prepare the balance sheet given effect to the above. So we have just analyzed the problem. Now we will just work out the solution to the problem here. So the first you will be writing the heading journal entries in the books of Bharati Limited. Then the first journal entry will be for reduction of preference shares. So what is the old share capital? 7,50,000. New share capital 3,75,000. So we will be writing it. So preference share capital account data 7,500 into 100, 7,50,000. To new share capital 7,500 into 50, 3,75,000. To reconstruction account, or you can also call it as capital reduction account. So both are the same. Whether you call it as the capital reduction or reconstruction, it is the same. To reconstruction account, 3,75,000 being reduction in the paid up value of the preference share. So you have reduced the value of paid up value from 100 rupees to 50 rupees. So this is the first entry for reduction of the preference share capital. Now next one, we have the equity share capital. So equity share capital is 5,000 into 100, 5 lakhs. Now it has been reduced to shares of rupees 25 each. So 5,000 into 25, 1,25,000. To reconstruction account, 3,75,000 being reduction in the paid up value of the equity share. So out of this new equity share capital, so we are considering only 1,25,000 and the rest of the amount, it goes to the reconstruction account. Then now in the third journal entry, we have the reconstruction account. So the reconstruction account is 7,50,000. Now how I got 7,50,000? Here you can see 3,75,000 here and again 3,75,000 here. So the total comes up to 7,50,000. To machinery account 8,440. How I got 8,440? 42,200 into 20%. So they have told we have to reduce 20% of machinery. So 8,440 out of leasehold premises, I have to reduce 30,800. Discount on issue of shares 18,000. Profit and loss account 15,000. To preliminary expenses 12,000. To RBD 15,300. So how I got 15,300? 76,500 into 20%. So we are supposed to write off 20% on the machinery value and 20% on the debtors value. So that comes up to 15,300. So whatever is the balancing amount, so you add all this, from that you deduct. So you get 5,35,460. So that is the patent's value we are writing off, being the above items written off against capital reduction account. Now, next we have the balance sheet of the Bharati Limited Company post reconstruction. So what is the authorized capital now? The 100 rupees share has been reduced to 50 rupees. So 10,000 into 50, it comes up to 5 lakhs. Then we have 10,000 into 25, it comes up to 2,50,000. Then we have the subscribed capital. So 7,500 preference shares of rupees 50 each, 3,75,000. The equity shares of rupees 25 each, 1,25,000. Sundry creditors and bank draft. So the total comes up to 5,50,000. Now in this asset side, we have the patents. Now what is the patent value? 8,50,000. So we have already written off 5,35,460. So the balance remaining is 3,14,540. Then machinery 42,200. Out of that I have deducted 20%. So 8,440 I have deducted. I am getting 33,760. Then leasehold premises, out of 1,30,000, 30,800, they have asked us to reduce 30,800. The remaining balance is 1 lakh. Then stock value is 55,000. So out of this I have reduced 15,000. The balance is 40,000. So debtors also 61,200. So cash in hand 500. So the total is 5,50,000. So this is the reconstructed balance sheet. So with this we come to the end of this session. Hope you have all followed it. Thank you.